3 large-cap Nasdaq names. 3 different sectors. And every single chart underneath them is flashing the same signal: strong buy, verified against the live daily and weekly tape, not against a research headline. This is a deep dive read. Per stock we walk 5 charts: daily trend map, momentum, pivot, battleground, Fibonacci and Bollinger, and the volume plus weekly frame, and then a verdict slide that puts the bull trigger and the bear trigger side by side. 3 stocks. 6 slides each. 18 slides of pure chart work, plus the framing on either side. Let's go! Before the charts, why these 3, and the filter that produced them. 4 filters. Market cap above $10 billion, listed on the Nasdaq. The 50-day moving average must sit above the 200-day on the daily, long-term structure already bullish. Clean bull pattern with a defined trigger and a defined invalidation. And sector diversification, no doubling up on the same theme. 3 names survive: NVDA, Amazon, ASML. AI compute, consumer plus cloud, and semiconductor equipment. Different drivers, same chart message. Stock 1. NVDA. Ticker NVDA. Start with the daily trend map. The last close prints $216.96. Above it, the 20-day exponential at 214.78. Above that, the 50-day at 203.25. And below those, the 200-day at 183.93. All 3 moving averages are sloping up. Price is sitting above all 3. That is the canonical stacked bull configuration on the daily, and it is held for the entire 14-month lookback. The dotted line above price is the most recent all-time high at 236.54, printed May 14th. Current price sits 8.3% below that high, close enough to retest. 1 slide in, the trend is unambiguous. Bullish. Momentum check. RSI on the 14-day at 55.2. Neutral, well below overbought, well above oversold. Plenty of room before the tape gets stretched. MACD line at plus 7.04. The signal line at plus 7.8. The histogram is negative 0.77, which means the fast line is just under the slow line. Short-term momentum is mildly bearish even inside the larger uptrend. The histogram is what we watch. As the bars compress towards 0 and then flip positive, that is the early momentum rebuild signal. Watch this slide. Momentum bottom line, pause inside an uptrend. Not a reversal. The pivot battleground. This is the daily zoom, last 60 bars, with the classic floor pivots overlaid. Pivot point sits at 221.61, derived from the prior day's high, low, and close. Above the pivot, R1 at 225.30, R2 at 231.08, R3 at 234.77. Below the pivot, S1 at 215.83, S2 at 212.14, S3 at 206.36. The close at 216.96 is between the pivot and S1, leaning to the support side. A break of R1 unlocks R2 and R3, the all-time high retest. A break of S1 puts S2 in play. The chart is balanced, and that is the setup. The first level that breaks tells us the direction. Fibonacci and Bollinger on one chart. The fib retracement is drawn from the recent swing low at 164.27 up to the swing high at 197.63. Standard retracement levels labeled on the right edge. Bollinger bands 20 period, 2 standard deviations. Upper band at 235.41. Mid band, the 20-day simple moving average at 214.82. Lower band at 194.25. Price sits just above the Bollinger mid, well inside the bands. That is a constructive position, not extended, not stressed. Fib confluence to watch. The 50% retracement at 180.95 lines up with the rising 50-day EMA. The 61.8% retracement at 177.01 golden pocket support sits above the swing low. Two independent tools, same support cluster. That is confluence. Volume and the weekly frame. Top panel, daily volume in millions, color matched to up days and down days. The 30-day average sits at 153.4 million. The recent surge to the all-time high came on above-average volume, that is buyers showing up. The pullback after is on declining volume, that is profit-taking, not distribution. Bottom panel, weekly OHLC bars. The 52-week range goes from 132.92 on the low to 236.54 on the high. The current weekly close sits 8.3% below the 52-week high. Top quarter of the annual range, not stretched. Volume and weekly say the same thing, the structure is intact and the pullback is healthy. NVDA verdict slide. Bull trigger on the left. Bear trigger on the right. Bull side. A confirmed daily close above 225, R1 unlocks 231, then 234. Above that, the Bollinger upper band at 235.41, and finally the all-time high at 236.54. Bear side. A close below 216, just under S1 opens the door to 212 and 206. Below that, the Bollinger lower band at 194, the 200-day EMA at 183.93, and the swing low at 164. That is the entire NVIDIA red. 2 levels. 5 charts agreeing. Stock 2. AMZN. Ticker Amazon. Same 5 charts, same verdict structure. Daily trend map. Close at 268.16. 20-day EMA at 263.19. 50-day EMA at 249.06. 200-day EMA at 231.32. All 3 EMAs are rising. Stacked bull. Price above all 3. The most recent all-time high at 278.56 is just 3.7% above current, within reach in a single strong week. On this name the news is fresher. The 50-day moving average crossed above the 200-day on May 6, a daily golden cross. The slide deck favorite continuation signal. Less than 3 weeks old. Momentum. RSI at 60.4. Trending up, healthy, not overbought. The reading is exactly where you want it on a stock that just printed a golden cross. MACD line at plus 5.81. Signal at plus 4.48. Histogram positive 1.33. The fast line is above the slow line and the spread is widening. Momentum is confirming the trend. 2 indicators, same story. Trend up, momentum positive. Of the 3 names, Amazon has the cleanest momentum picture today. Pivot Battleground. Pivot at 266.44. R1 at 271.51, R2 at 274.89. S1 at 263.39, S2 at 258.07. Close at 268.16 is above the pivot. That is the bullish side of the battleground, buyers in control of the daily structure. A break of R1 at 271.5 puts the all-time high at 278 squarely in play within days. A loss of S1 at 263 opens S2 at 258. Fib and Bollinger. Swing low at 196, swing high at 278.56. That is an $83 range, context for how far this name has come. Bollinger upper at 276.58. Mid-band at 267.19. Lower at 257.79. Price hugging the upper half, that is buyer pressure. Fib 50% retracement at 237.28. 61.8 at 227.53, almost on the EMA 200 and on the golden cross price. 3 independent tools, 1 support cluster. That is the Amazon floor. Until that cluster breaks, the bull setup is alive. Volume in weekly. The push to the all-time high in early May came on the biggest volume bar of the quarter. The pullback since has been on declining volume, same pattern as NVDA. Weekly 52-week range from 196 on the low to 278.56 on the high. Current weekly close sits at 268.16, 3.7% off the high. That is top decile of the annual range. Stocks that hold the top 10% of a 52-week range break out more often than they break down. Statistics are on the bull side. Amazon verdict. Bull side. A confirmed close above 271, or 1 opens or 2 at 274, the Bollinger upper at 276.5, and the all-time high at 278.56. Above that, the round number target is 300. Bear side. A close below S1 at 263 breaks the post-golden cross structure. Below that, S2 at 258, then the EMA 50 at 249, and finally the golden cross price at 228, which doubles as the EMA 200 zone, the hard line. Cleanest bull catalyst of the three names. Watch 271. Quick break. 2 stocks deep dive done. 1 to go, and ASML's chart is the cleanest of the three. If this format is the kind of work you want more of, the subscribe button is right there. A like helps the algorithm a lot. Stock 3. ASML Holding. Ticker ASML. Daily trend map. Close at 1626.90. 20-day EMA at 1515.66. 50-day EMA at 1457.85. 200-day EMA at 1348.53. The spread between the 20-day and the 200-day is $167 wide. Stacked bull on steroids. And the spread has been widening, not narrowing, confirmation that the trend is accelerating, not decaying. And the headline. The most recent close is the new 52-week high. 1638.50. There is no overhead resistance from prior price action. The chart is on the highest point on its history. Momentum. RSI at 61.76. Healthy, trending up, not overbought. MACD line at plus 43.7. Signal at plus 34.9. Histogram positive 8.8, a wide positive spread. The fast line is way above the slow line. Of the three names, this is the cleanest momentum print. RSI not overbought, MACD aggressively bullish, trend, momentum, and oscillator all pointed in the same direction. Pivot Battleground. Pivot at 1579.91. R1 at 1613.88, R2 at 1654.7, R3 at 1679.28. S1 at 1558.03, S2 at 1517.20, S3 at 1507. Close at 1626.90. That is between R1 and R2 above the pivot, on the bullish half, with a clear path to R3 and the round number 1700 above that. Fib and Bollinger. Swing low at 1248.11, swing high at 1547.22. The new all-time high above the swing high means a fresh leg of the trend, and we are in that leg right now. Bollinger upper at 1654.21. Mid at 1501. Lower at 1348.64. Price is approaching the upper band. A tag of the upper band on a stock making new highs is bullish, not stretched, as long as it comes with positive MACD histogram. We have that. Fib retracement of the recent swing. 50% at 1400. 61.8 at 1364. These are the levels a healthy pullback could test without breaking the trend. Volume in weekly. ASML's recent leg up came on consistently above average volume. That is institutional accumulation, not retail enthusiasm. Weekly 52-week range from 683.48 on the low to 1639.06 on the high. That is a 138% move from the August 2025 low. Current weekly close minus 0.1% off the 52-week high. Effectively at the highest weekly close on the entire chart. ASML verdict. Bull side. A confirmed close above R1 at 1614 already pressed today, unlocks R2 at 1655, the Bollinger upper at 1654, R3 at 1679, and the round number target at 1700. After that the chart is in price discovery. Bear side. A close below S1 at 1558 breaks the day's structure. Below that, S2 at 1517, the EMA 20 at 1516, the EMA 50 at 1457, that is the soft stop, and the hard invalidation is the swing low at 1248, which sits below even the 200-day at 1348. Cleanest of the three. If you are going to pick one chart to trust based on confluence alone, this is the chart. 3 stocks, side by side. 10 data points each, pulled live from the same daily feed. By RSI ASML highest at 62, Amazon 60, NVDA 55. None overbought. By MACD direction Amazon and ASML both bullish, NVIDIA short-term bearish inside a larger bullish structure. By distance from ADH ASML basically at the high, Amazon minus 3.7, NVIDIA minus 8.3. By setup quality. ASML is cleanest already at all-time highs with widening MA spread. Amazon is freshest golden cross less than 3 weeks old. NVIDIA has the highest payoff if the bull flag breaks up biggest distance to the ADH retest. 3 scenarios for a portfolio built around these 3 names. Bull case, around 40%. NVIDIA confirms above or 1225. Amazon breaks the all-time high at 278. ASML rides towards 1700. All 3 trigger together, the high conviction outcome. Base case, around 45%. 2 of 3 confirm, 1 ranges. NVIDIA chops near the pivot. Amazon holds above the EMA 50. ASML consolidates near the all-time high. Most likely path and still long biased on the confirmed names. Bear case, around 15%. NVIDIA loses S1 at 216 and slides toward the swing low at 164. Amazon closes back below the EMA 50 at 249. ASML breaks the swing low at 1248. Structural red flips to neutral, and capital rotates to cash or defensives. The bottom line is directional. The weight of evidence across all 3 charts leans bullish and meaningfully so. ASML, cleanest pure trend follow. Already at the high, widening MA spread, momentum positive across all time frames. Amazon, freshest catalyst. Golden cross less than 3 weeks old. Price already pressing the all-time high. NVIDIA, highest quality compression. Bull flag below the all-time high, EMA stacked bull, healthy RSI, MACD short-term consolidating before the next push. As a basket, the 3 covered 3 different sectors, 3 different drivers, 3 different beta profiles, but every single chart is saying the same thing. That is exactly what you want. Which of the 3 is your highest conviction trigger? NVIDIA above 225, that is the bull flag breakout. Amazon above 278, that is the all-time high breakout. Or ASML pressing towards 1700, that is the trend continuation. Drop the ticker and the level in the comments. The pinned comment has all 3 triggers and all 3 invalidations side by side. If this deep dive format helped, the like button and the subscribe button keep this kind of work coming. Trade your plan, not the noise. See you on the next one.